If you're using infinite banking or planning on using infinite banking as part of your long-term financial strategy, one of the questions that comes up is what happens if I don't repay my loans? Well, first off, the company is going to be made whole. When you look at these contracts, either when you pass away, you surrender the policy, or the policy lapses, or hopefully you actually just pay back the loan conventionally, the company is going to get back their principal and interest. So the key for you is managing it properly so you don't end up in a situation that makes a bad situation worse. So first off, let's break down what's happening. First off, you have uninterrupted compound growth on the cash value side. On the loan side, if you take out one of these loans and you're not paying it back, it works the same way. So these things can really snowball and get away from you. That's why I always tell my clients, if you can, at least make the interest payment every single year. But if you're not making these loan payments, the nice thing is you don't have the repo man or somebody else coming and knocking on your door. You're not going to have a collection agency or stuff showing up in the mail looking for you. The worst case scenario is that you let one of these things lapse and then you may have a tax consequence. So if you have one of these policies and it's pretty efficient and it's been around for a while and you end up getting more capital coming back to you than premium you paid in, not only could you have a situation where you lose a policy, but you may have a call from the IRS if you're not able to pay those taxes. So that would be absolute worst case scenario that could pop up. But looking at these policies, if you plan for it, whether it's for passive income or windfall, you can set it up so you have a loan that's out and you're not making regular payments, but you know that if it's set up properly and you work with your practitioner, that it can supplement passive income later on, or you can wait for a big deal or something to come through and then you can have that windfall and then you can make those payments back and make that policy whole again on your terms. The big thing in all of this is planning. If you plan ahead, you're good. If you're not planning ahead, that's where you can get into trouble. With that in mind, though, there are situations and emergencies, and I've talked about this in other videos, where you can draw on this policy if you need to, but it shouldn't be a piggy bank. It should be a no-kidding emergency. If every single year you're maxing out the loan because you have an emergency, well, that's not an emergency problem. That's probably more of a lifestyle problem. That's something else that needs to be dealt with. Really what it comes down to in all this is you have to treat it with respect. It's like any other asset, whether it's real estate, a stock portfolio, or something like that. If you abuse it and you don't have respect for it, it's not going to work how you want it to work and can get you into trouble. All right, if you found this valuable, please like. If you want more information like this, go and subscribe. And if you're ready to take the next step, go to my Start Here page linked in both the description and the comments. In my next video, I'll be covering whether or not loans can actually be called due. I'll see you there.